Hello everyone, and thank you for watching my videos. In my previous videos, I made numerous comparisons between the stock market and the Forex market. But what I want to do in this video is I want to show you just how studying the stock market can help us get the advantage that we need as we are planning our investment strategies. Studying the stock markets along with the commodity charts and the bond charts as well as with other securities can also give us large amounts of fundamental analysis that's very important in order to ensure that our investments are more successful and that our profits are maximized. So let's talk about equity markets. So here's what we need to know about equity markets. We study them in order to determine how strong a currency will be in the future. For example, let's say the Dow Jones is really high right now. If the Dow Jones is high, that means consumer confidence is also high. And that means American companies will attract investors worldwide, creating a demand for the US dollar. So there is a relation between what happens in the Dow Jones market and what happens in the US dollar market. And as we know, the US dollar makes up a large portion of the currency movement in the Forex market. So what happens in the Dow Jones also affects what happens in the Forex markets as well. So it pays to pay attention to the indices. Okay, so here is a list of those indices. In the USA, we have the Dow Jones, NASDAQ, and Standard & Poor's 500. In Japan, we have the Nikkei. Germany, we have the DAX. Eurozone has the DJ Stocks 50. UK has the FTSE, and Hong Kong has the Hang Seng. Okay, so here's what we need to know about stocks and Forex. How do we get that information from the stock market that we can use to improve our strategies? Well, here's what we need to know. When a domestic equity market rises, confidence in that specific country grows as well, leading to an inflow of funds from foreign investors. Just like I explained a minute ago about what happens when the Dow rises. Now, if the Dow lowers, then the opposite effect happens. Less investors, meaning less demand for US dollars. That makes the US currency weaker. Okay, so let's compare two indices now. We're going to compare the Dow Jones and the Nikkei. Notice that there is some symmetry between the two indices. They share the same bearish trend, and then they share the same bullish trend. And they continue to share the same bearish and bullish trends. So that it's also important to note that what happens in the Japanese economy can also have an effect on what happens in the American economy and vice versa. Now, we can use this information to our advantage if we choose to invest in the US dollar yen pair. So here's an example. So here we have the Nikkei, which is indicated in blue. We have the US dollar Japanese yen pair indicated in the orange. Notice that in the beginning, there was an inverse proportion between the Nikkei index and the US dollar Japanese yen. But in recent times, the two are moving in symmetry. So there are times when the index and the pair move in opposite directions. There are times when they move in the same direction. So it's also very important to determine which directions the markets are heading in, because that can give us an idea as to how we should plan how we should open our positions in that pair. So again, if we see that the Nikkei is heading in the same direction as the US dollar Japanese yen pair, well, that could be a clue that we should open a long position. Okay, let's change indices. From the Nikkei to the Dow, let's compare the Dow to the US dollar Japanese yen pair. Notice that they are moving in a positive correlation. Now, that doesn't mean that the Dow will always move in a positive correlation. Sometimes it moves in an opposite correlation. But the point is, there is a relationship between the index and the US dollar Japanese yen pair. So whether they're moving in an opposite direction or they're moving in the same direction, they're still moving in tandem with one another, which means if we're going to invest in the US dollar Japanese yen pair, before we decide if we should go long or go short, check to see what's happening in those two indices, because that can yield a great amount of information that we can use to make large profits when we invest in the US dollar Japanese yen pair. Now, let's switch pairs. Let's go with the euro yen pair. Now, we can also use the stock markets to determine which position we take when we're investing in the euro yen pair. Okay, now the euro yen pair, what's nice about this pair is that it correlates to many different stock markets, more than the US dollar Japanese yen. Now, the euro, along with the US dollar and yen, these are safe haven currencies. So we know that the euro, the yen, and the dollar, those currencies are going to be strong for years to come. There will be periods where the euro or the yen or the dollar will be weaker than it should or stronger than it should, but we're talking stability here, strong in terms of stability. Now, whenever confidence in the global economy is down and traders are fearful, we typically see traders take money on top of the stock markets, which leads to a drop in the values in the DAX and the Standard & Poor's. So again, we're looking at what happens in the stock markets that can determine how much of an effect that will have in currencies such as the euro, the dollar, and the yen. Okay, so let's compare the Standard & Poor with the euro Japanese yen. And notice that there is some correlation. Now, in the beginning, they were moving in opposite directions, but there seems to be some symmetry. Now, it may be overwhelming at first to determine why a currency pair and a stock index might be moving in opposite directions or in the same directions. But what I want to do in this video, my objective just in this video is to show you that there is a relationship between the currency pair and the index. So if you haven't learned anything in this video, I just want you to learn just that, because the relationship between the two can help us immensely. That can give us very key fundamental data that we can use in order to determine should we go long or go short. Okay, so let's change indices here. Let's look at the DAX. As we can see, there's some symmetry between the DAX index and the euro yen. Okay, so now let's go with intermarket analysis. So we're also going to take some of the information in the previous video about commodities, and we're going to apply that as well. So we have a full understanding as to how the Forex market works with the stocks, commodities, and securities markets, because all of that information is tied into fundamental analysis, including some sentiment analysis in there as well. Okay, so here's what I'm trying to say. And just like from the previous video, I'm also applying that to this video. So, as we know, if gold goes up, US dollar goes down. And again, when the US economy is in a recession, many people feel that they're going to lose some wealth if their assets are in US dollars. So they switch to gold in order to maintain that wealth. So it makes sense that gold and US dollars are in reverse proportion with each other, as I explained in the previous video. Okay, next example. If gold goes up, the Aussie dollar goes up, because Australia has such a large gold reserve and much of that gold reserve is produced from their own land. So obviously, if the demand of gold is up, that means it's up to Australia to create to mine more gold and to distribute the gold that they have in the reserves in order to meet the demands of investors around the world. So remember, the price of gold goes up. That means the Australian dollar will go up with it. So that's why the Australian dollar and the Australian dollar US dollar pair is also very important when we're comparing the price of gold. Just like I mentioned before, the inverse proportion between gold and US dollars. Now, if gold goes up, the New Zealand dollar US dollar goes up. Because New Zealand dollar also because the New Zealand Reserve Bank also has some gold, a significant amount of gold stored in their reserves as well. Also, if gold goes up, then the US dollar Swiss franc goes down. Or we can say the value of the Swiss franc gets stronger because 25% of the Swiss franc is backed by gold reserves. So we also want to pay attention to the Swiss franc in regards to what the gold market is doing. Okay, if gold goes up, US dollar, Canadian dollar goes down because gold and the US dollar, they're inversely proportioned. Okay, now if oil goes up, the US dollar, Canadian dollar goes down. Or we can say the Canadian dollar gets stronger. Like, for example, Canada, they export such a large amount of oil. Many other countries that don't have their own oil, countries like Japan, they need to import large amounts of oil in order to fuel their economies. Which means if Japan wants to have Canada's oil, Japan needs to buy that oil by converting their currency into Canadian dollars, which creates the demand for the Canadian dollar. So, and also remember this too, the US economy also depends on Canada's oil, which also creates the demand for Canadian dollars. So, in America, just like I mentioned before in the previous video, when we go to the gas station to put gas in our cars, pay attention to those oil prices because that affects the value of the Canadian dollar. Now, if gold goes up, the euro dollar also goes up, meaning the value of the US dollar goes down. Now, if bond yields go up, the local currency goes up. Because again, with the increase of bond yields, that also increases the central bank interest rates. So the increase of central bank interest rates also increases the economy. That's the reason why central banks raise their interest rates. Now, if the Dow goes down, Nikkei goes down. Because remember, the American economy and the Japanese economy are closely tied into one another. So whatever happens in the Dow affects the Nikkei. Whatever happens in the Nikkei affects the Dow. If Nikkei goes down, the US dollar, Japanese yen goes down. Because again, we're talking about what happens because we're talking about proportions. So when we are investing, or if we choose to invest in the Japanese yen, or I mean the US dollar Japanese yen pair, excuse me, then we also want to compare that to what's happening in the Dow Jones or in the Nikkei, because that currency is closely tied to the activities that happen in those two currencies. So remember, if you haven't learned anything else, just learn this. What happens in the stock markets affects the currency pairs that include that local currency. For example, if we're planning to invest in the euro dollar, we want to examine the Dow Jones and the DAX. Or if we want to invest in the pound dollar pair, focus on the FTSE because that also affects what happens to the British pound. Thank you for watching this video and good trading.